Good afternoon. Thanks for tuning in. You're watching Countdown on BloombergQuint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza. Well, these are the top headlines that we're tracking at this hour. Markets remain locked in a range. Benchmark indices trade flat. Banking stocks are off the day's low but remain the principal laggards. Bharti Airtel remains the top Nifty gainer. The stock is trading at a 52-week high despite the Supreme Court rejecting its review petition on the AGR dues. On the other hand, Vodafone Idea is down almost 25% in trade. Reliance Industries is trading with strong gains ahead of its third quarter numbers. It is contributing 35 points to Nifty's gain, offsetting the pressure exerted by the HDFC twins. And Piramil Enterprises trades with gains after its board approved divesting its stake in the healthcare insights and analytics business for $950 million. And TCS along with HCL Tech are the two IT majors that will report earnings after market hours today. Good afternoon, Neeraj. It's a day of consolidation. No major losses, no major gains seen, but once again, broader markets outperform.
Yeah, and that's been the story. And I don't think too many people are perturbed with this as well. I mean, you can look at the Nifty Bank being down yet again in trade, or the Sensex and the Nifty are flat. But everybody talks about a day well spent in the market simply because the markets which are present in the portfolios of the retail investors are the broader end of the spectrum, and those are doing well. So, Devin, I'll speak about that. Let me talk about the large caps first. It's been a flat day. Banks have corrected about 0.5%, but they're off the lows of the day. They were down about 1.1% at the point of time. From there, Bank Nifty certainly off. So that's actually a pretty good sign. Bring up the heat map and show you what's moving and what's not. So, on the losing side, you still have Bharti Infra down about 8.5%. It was down about 10% at the point of time. But the others, Yes Bank was correcting in the session and now is just about 2.5% lower. IndusInd Bank was down 4% on open, now just about 2.5%. But the likes of BPCL, GAIL, IOC, etc., that whole PSU pack has been jettisoned today. So the last few days, these stocks have corrected and corrected quite strongly. What is doing well, though, is the key question. Bharti Airtel, 5.6% higher for almost everybody who thought that Bharti Airtel will have a big negative reaction and therefore you should buy then. Well, the stock opened up 3% higher and is up about 5.6%. Reliance Industries is up 3%. Now you know the reason why the market is doing what it is doing. And then some more. The likes of Nestle is gaining to an extent. Bajaj Twins, Finserv and Finance are up and about in trade. But the real mover is Reliance Industries. And Devina, shouldn't surprise too many people. Reliance has helped hold the index higher. But hey, the broader markets which matter are anyways doing well. Yeah, they are. In fact, you've got the mid caps and the small caps. The streak of outperformance continues. I think this is the fourth straight day of outperformance that we're seeing for the mid caps and the small caps. 0.6% higher for the Nifty mid cap 100. BSE small cap 100 trades higher by about 0.5%. What's gaining ground then? Sterlite Technologies, and surprise, yesterday was a day where the stock fell on the back of disappointing results. The stock today has bounced back with equal gusto, 5.5% higher. Imami is up 7.5%. You've got MRF, Torrent Pharma, Janta Pharma and Apollo Tyres. So Tyres is a pocket, even CEAT for that matter, it's not here, but it's up in trade today. Fortis Healthcare is trading under by about 3.5%. You've got IDFC First Bank seeing some pressure. Prestige Estates, last 3 or 4 days of outperformance is finally giving way. You're seeing some profit taking coming into the counter. It's down in the session. Mindtree too, despite a decent set of numbers, is down about 1% or so. Coming to the broader small cap index, that too, which is up about 0.4%. Rallis India, and look at the smart move. This is seen on the back of its results. Stocks up 16.5%, and we're getting Yash a little later down in the show to talk about this in greater detail. Wellspun India is up 4%. Century Plyboards is up 4%. Walk Hard continues. Yesterday was up as well. Today too is giving you gains. What's losing out? Karnataka Bank. Avanti Feeds actually started positive in today's session, saw an uptick of about 1%, and then from there it's cooled off a bit and now down 3%. And then you've got the likes of an EID Parry, Suntec Realty, which are losing ground. What else is important to keep an eye out on? Well, it's the movement and the setup in the derivative space. Navneet is joining us to give us a quick update on that. Navneet.
Thanks for that, Davina. It's all about individual stocks today. Even if you look at the indices, which are largely trading flat, at least for Nifty, it's just up about 6% in terms of open interest gains so far. And remember, this is a usual trend towards the end of the session. You will see unwinding of these intraday positions as well. But the range, I'll come to that later. I want to pull up Bank Nifty futures. The index is off the opening lows. We opened with 1% cut, so there's been recovery from lower levels, but you are seeing some signs of fresh shorting coming up for Nifty Bank futures. Premium has gone up to about 120 20 points. Very quickly then, what sort of range you should watch out for Nifty? 12,400 call, which is sitting with maximum open interest, has seen fresh writing today. Almost 13 lakh shares have been traded there. 45, 46 is the premium. Even if somebody is writing the strike at current levels, the trader is safe till the time index moves higher to levels of 12,445 or 450. On the put side, fresh addition has come in for the 12,350 put, 11 lakh shares being added there. So the range, at least near term, today's range is 11,300 to about 12,400. Individual stocks, as I said, a lot of stocks are in action. Bharti Airtel, which is at 52-week high, it's witnessing both. On the future side, you are seeing long positions, and imagine 48% of the total quantity being traded has been marked for delivery, at least so far on NSE. So that speaks volume. Despite of a negative verdict, you are seeing cash-based buying coming up here, and 500 level being crossed and reclaimed in today's trade. The 500 call, which was sitting with maximum open interest, has already started to witness unwinding. So the writers of 500 call are unwinding position. 3.5 lakh shares have been unwound there. The second one is Bharti Infratel. That one has witnessed fresh shorting today. The stocks also slipped below its 50 and 100-day moving average with today's fall. It's down 8.5%. There is no major recovery that we've seen throughout the session for this one. 16% higher in terms of OI build-up. Torrent Pharma is the other one. The stock's trading at all-time high levels. It's gone up on really high volumes in the cash side. The white line is projecting today's volume vis-a-vis the average volume of last 20 sessions being projected on the blue line. And look at that, the build-up. I've never seen such a build-up on Torrent Pharma, 48 to 49% higher when it comes to OI increase. So keep an eye on this one. The underlying is also at days high with gains of 4%. And cannot not mention Reliance Industries, the biggie with almost 10% weightage on the index, comes out with these numbers post-market hours, and the most active stock option strikes today belongs to Reliance Industries. Maximum open interest is at 1,600 call and 1,500 put. That's a 100-point range. Probably you can watch out. But in terms of most active strikes, 1,600 call is seeing has seen some unwinding, while you've seen 1,580 call and 1,560 call. So these are three most active stocks that are being that are being traded on NSE today.
Okay, let's welcome in a market voice, Siddharth Bothra, fund manager at Motilal Oswal Asset Management Company, joins us right now on the show. Siddharth, good having you. Thanks much for taking the time out. This is Neeraj here. Good afternoon.
Good afternoon. Thanks for having me.
Yeah, pleasure is ours. Well, some of your portfolios must be doing really well, because I'm guessing that there was some bit of value buying that would have been there in your funds. But January's been a month which has been marked by some bit of return to value, some bit of return to, not by choice, but not by design, but by evidence, to the broader end of the spectrum. Do you expect this to continue?
I think the market had become too polarized. If you even go back in the last, I would say in the last 2-3 months, we were anyway seeing the market breadth broadening. And, I think now it's getting accelerated, and hence it's becoming more and more visible. To that extent, it's definitely positive for the market. And, with regard to our portfolios and all, our portfolios have always been very bottom up, and it's very stock specific, and it takes into account different factors which keep changing in the markets at different times. So it has stocks which are accustomed, in a way, wanna do in different times. Accustomed to all those factor changes that would likely see in the market.
Okay, so which is fine. So as far as your portfolios, and you mentioned that now it is getting noticed because it is getting accelerated. So would you believe that the next few months, barring something unforeseen happening, could actually see the value stocks or the broader of the spectrum companies, or both put together, do better?
I think market breadth should increasingly, expand, because what we are seeing is that, if you look at most of the economic indicators, they definitely seem to be nearing their lows, or in some cases seem to have bottomed out. So as going 2-3 quarters ahead, as some of these lead indicators start improving and the base also starts coming into effect, I think we will see this market breadth increasing a bit more, and I would kind of agree with you that this trend should sustain in the near to medium term.
All right.
Nifty mid-cap and small-cap, obviously the outperformance continues. Siddharth, let's talk about individual trends now that you're spotting for 2020. And from the Motilal Oswal stable, is there any conviction trade that you would like to share with us?
So I think, what we have been seeing in the last, in the near term, what we've been seeing is that some of the segments are emerging as big winners, while when you look at the consumer side, while the organized staples or even the discretionary, while they have struggled, one segment which has benefited significantly is the organized retail. So I think that's emerging as a big opportunity, which is very similar to where we thought insurance was a couple of years back, where despite the entire slowdown in the overall economy and the markets, the insurance companies had done significantly well. So I think organized retail would be one which I think will stand out in the near term.
Retail, okay. Disappointments though are anticipated within a few of these pockets yet again. The start of 2020 so far at least has not been good for the telecom space. But for Bharti Airtel in particular, there seems to be this opportunity that has come out from this disappointment that we got in yesterday's session from the verdict that came out. Do you feel that it's capable of capitalizing on this opportunity that could probably prevail?
I think in telecom, what I think investors are excited about is the industry consolidation which has happened. So this is a very large market, and it's got a long runway, and it increasingly looks like there would be very limited players there. And this kind of industry consolidation over a long period of time, in the long run, would definitely benefit the players who will survive this entire turbulent phase and continue to then reap the benefits of the entire growth that the sector sees. So I think increasingly people are very clear as to who are these two, now it looks like just two key players. So the industry structure as such is so attractive that I think companies who play this right on long-term basis should do very well.
Remains to be seen whether there is any sort of intervention now which comes from government side in order to provide any sort of relaxation or relief with regard to the dues. Siddharth, good afternoon. The other space which has been buzzing and started gaining traction is the pharma space. We're finally seeing certain stocks moving higher. We've got Torrent Pharma, which is trading at its life highs today. And this is a space which has not done well in the last 3 or 4 years. And the reasons, of course, we know there is pricing pressure, US FDA concerns. Is this the area you guys are looking at?
Definitely. I think, there are some very good ideas in this entire space. If you look at some of our biggest winners in the last 1 year have been in the pharma space. Like when you look at my fund F25, one of the best performing stock has been Abbott. So if you look at the domestic pharma, already it had got a bit re-rated in the last 1 year. Now increasingly we are seeing, even the export oriented or the contract manufacturers also doing very well. So I think the pharma space is one where currently I would agree with you that the entire space is looking very attractive. Some of these stocks, as you mentioned, have not just 3-4 years, for almost like 4-5. For a very long period of time, they have been in the doldrums because they have been investing on the R&D side, and the US market has been very challenging. So we are seeing two trends here. One is that the domestic side of their business now, to a large extent, kind of covers up their large portion of their market cap, which we see today. And we are definitely seeing some improvement on the US market also. So pharma is definitely one segment which looks very attractive from here.
The other key holdings of the fund you mentioned, Siddharth, the private banks, and we've seen all these banks, be it ICICI Bank, Kotak Mahindra Bank, doing pretty well, and of course HDFC Bank has been performing consistently for last many years. What's the outlook going ahead? Do you expect the sort of returns that we've seen in the recent past from these private bankers will continue, or there could be more concerns now coming in from the retail book, which majority of these banks are shifting focus to?
So I think many of these retail banks have been, great compounders over not just some years, but now almost like, couple of them are almost for some decades now. I think the key thing here is that you have to distinguish within these segments. So the concern that you raised on the retail side or the consumer side is a valid one. But I think, even within that, you will have, great variance. There would be some companies, which have their systems in place, which they have their entire risk system in place, are using technology in a big way. So I think there will be, a fine distinguishing happening within this as well. And I think some of these companies, the opportunity size looks like, as big as it was in the past. Because still, when you look at the household leverage, it's amongst the lower ones in India. The opportunity sizes are increasing, and as in when you look at the overall size of the market, I mean the shrinkage that we have seen on the non-banking or on the NBFC side or even on the PSU side has benefited them in a big way. And it looks like this advantage is only going to continue. So I think this is one sector where I think the big will become bigger, and they will continue to benefit in a big way, and going forward would continue to be positive on them.
Siddharth, just at least from one follow-up question to an earlier answer that you gave, you likened organized retail to where insurance was 2 years ago. Why that simile, and do you reckon that growth rates could actually be similar, though it's difficult to compare them because the metrics are completely different, but why do you liken the two?
Okay, so the comparison I was making is more for our portfolio, like, when you look at the last 1-2 years, the stocks which did very well for us were insurance stocks. And what I also meant was that this was one sector where, the growth was almost insulated from the overall market. So despite the fact that we saw deceleration in growth across almost all sectors, this was one sector where, the growth actually accelerated in a big way. And many of these stocks were new, they were not listed earlier, and so they were not there was some level of under ownership, and also even on the understanding side, some of these companies were not very well understood. I think some kind of a similar opportunity exists today in retail, where many of the companies which are there don't have a very long history. Some of them have been listed for a limited period of time, and even in this environment, I think the growth there has been very strong. And while near term, many sectors, while we are expecting some recovery to happen, but the near-term growth that we can see is still weak, whereas these companies, I think, could actually accelerate growth from here. And as and when the economic recovery picks up, they would benefit even more. So I meant it more from that perspective that, for my portfolio, I think the way, the insurance stocks completely stood out in the last, say, 1 or 2 years. I feel organized retail could be one sector where you could find some opportunities which could, completely stand out on the growth side compared to other sectors.
Okay. We wish you all the best for that, doing so, and maybe more so, Siddharth. Thanks so much for joining in today and giving us your perspective.
Thank you so much for having me. Thank you.
Well, that's the view from Motilal Oswal AMC. Now, I'm trying to look at companies which are doing well. We were speaking about how some of the FMCG names the last few days have done well. Emami today is in that kind of a zone, actually much better than what the Nestle's and that others have done. They have done well over the last 4 or 5 sessions. Emami is up 8%. It was actually 7%. It actually was up at about 9% just a few minutes ago. So some really smart moves that have come in for that stock in this session. They've been now speaking about Sterlite Tech being up 5.5%, and yes, it's a surprise. Look at the gain now. It's 6.7% at 134.50. What a sharp uptick there for this stock. So really smart moves there. Vinati Organics has gained quite a bit, 2135 or 2140 or thereabouts is the kind of gain there. And Piramal, after the deal that they've signed, is for the diagnostics business, healthcare business, up about 5.5%, 1633 and counting for Piramal Enterprises. So, well, quite a strong show, and some of the slightly forgotten names. Piramal has been forgotten of late, or Emami forgotten of late. are coming back today.
The city gas distributors are also up and active yet again. So yet another day where you've seen good gains coming in for the stock like IGL, which is now at 470. The last 7 days, almost 13% gain on the counter. But the bigger one is MGL, which has seen the kind of big move, I think, yesterday or day before yesterday, when you saw 7 to 9% pop that came in onto the counter. MGL is the other one, if you could get that as well. And IEX, that too has been active. MGL is now at 1148. Started off on a muted note, but then has picked up and stayed higher. That's MGL for you. Edelweiss has picked up today. So after seeing a cut of almost 5% yesterday, today the stock's up about 2.5%. So some bit of a recovery that's coming back into the counter. But let's shift focus to earnings now. Nearly 1/3 of the Nifty weightage will be reporting earnings today and tomorrow. Our team of researchers are here to take us through the expectations. Samit, Agam and Shefali are joining in right now. Samit, starting off with you first on Reliance Industries, the big one there. The core business is expected to post the highest EBITDA growth in 6 quarters. What's the street pricing in?
Well, if you see the revenue number compared to last quarter on a standalone basis, is expected to be higher by nearly 6.5%. The EBITDA is expected to jump nearly 7% compared to last quarter, and this will be the highest growth in EBITDA in the last 6 quarters that the company could report. EBITDA margins could come in flat at 15.7%. The net profit was also expected to remain flat at close to 9,700 crore rupees. Now, the gross refining margin, that is expected to be higher marginally to around $9.5 per barrel, and this is despite the fact that the Singapore gross refining margin averaged lower in this quarter at around $1.7 per barrel. Now, because of this, Reliance Industries GRM's premium to the Singapore gross refining margin is expected to rise to nearly $7.8 per barrel, which is the highest in at least the last 12 years. Now, this is because the Singapore gross refining margin had declined because of high exposure to fuel oil, but Reliance Industries GRMs are expected to remain higher because they do not produce fuel oil, and that's the reason we are seeing this kind of a premium to the Singapore gross refining margin. Now, because of this, the refining EBIT is also expected to be higher compared to last quarter, and this will also be aided by a higher throughput number. Now, the throughput is expected to be higher compared to last quarter because in last quarter there was a planned shutdown. However, in the petrochemical business, if you see, now the petrochemical EBIT is expected to come under significant pressure due to sharp decline in product spreads. In fact, according to analysts, the product spreads are near or below the industry cash cost, that is below industry break-even. However, some of these negatives for the petrochemical business will be offset by cheaper US ethane cost and higher volumes in the third quarter of financial year 2020. On the consolidated basis, if we see the retail numbers, now they are expected to be higher compared to last quarter, driven by higher contribution coming in from the high margin core segments, and the overall consolidated earnings are expected to be boosted because of refining, retail and the telecom business. Now, the key things to watch out for from Reliance Industries earning would include the GRM outlook of the company ahead of the IMO regulations, update on commissioning of petcoke gasifiers, clarity on INVIT, evaluations of Geo Fiber assets, any update on the capital expenditure plans and the debt reduction plans, and any clarity on startup of gas field would be important to watch out for from Reliance Industries earnings today.
All right, that's Reliance Industries, where you mentioned telecom, and leaps and bounds have been made by Reliance Jio, which has become the most awaited part in the Reliance's earnings. What are analysts pricing in for Jio, Samit?
See, compared to last quarter, the revenues are expected to be higher by 11%. The EBITDA is expected to rise by nearly 16%. Margins are expected to come in higher at 43.6%, while the net profit is expected to see a jump of nearly 43% to close to 1,400 crore rupees. Now, the average revenue per user is the key number for Reliance Jio. That is expected to be higher by 3.3% to 124 rupees. Now, this is for the first time since it started reporting its numbers. The company's ARPU is expected to rise on a sequential basis, and that is because of the tariff hikes and the IOC charges. Now, if you see the company's EBITDA, that is expected to be boosted by subscriber additions, tariff hikes and the IOC charges. Now, analysts are expecting the subscriber base for Reliance Jio to be close to 37.7 crore by the end of the December quarter. There is an addition of nearly 2.2 crore, and since the new tariff is applicable only for those prepaid customers whose validity ends in December, the ARPU growth is expected to be lower than the actual quantum of tariff hike. So the full impact of this tariff hike will be visible only in the fourth quarter of financial year 2020 and in the first quarter of financial year 2021. Also, the analysts are not expecting any negative impact on the EBITDA margin due to the launch of Giga Fiber. Now, the key things to watch out for from Reliance Jio earnings would be update on JioPhone subscribers, commentary on tariff changes, signs of decline in capital expenditure intensity, and the increase in cost structure due to commercial rollout of Giga Fiber would be important to watch out for from Reliance Jio earnings today.
All right, and we will be watching out for those earnings and all the verticals, telecom, retail, as well as refining and petchem. But moving away from Reliance, the other heavyweight on Nifty, TCS is likely to report a growth in its top line due to large deal win. Margins too are likely to see an expansion on a sequential basis. Agam Vakil is here to take us through what the street is pricing in from this IT major after Infosys. Agam, over to you.
All right. So, well, as far as TCS goes, it's not going to be any fireworks. It's going to be a standard quarter, just like many others that the peers have already seen, at least as far as expectations are concerned. The top line is expected to grow by nearly 1%, nearly 2%. Of course, this is on a sequential basis as far as your dollar revenues are concerned. But coming down to how things are panning out when it comes to the rupee revenues, that is likely to see a growth of around anywhere between 2 to 3%. Of course, moving on, we're likely to see a 50 basis points expansion in EBITDA margins at around 24.1%. Profits could also consequently be higher as far as TCS is concerned. Now, revenues are largely going to be aided by their latest mega deal that they signed with the Phoenix Group, and the total contract wins estimated is expected to be at around $2 billion. It may be lower as compared to what TCS has been used to of late. However, $2 billion is still a considerably large number, and that, of course, always augurs well for the company. There has been a slowdown in BFS as acknowledged by Infosys and Wipro. We're going to have to wait and watch whether or not that is also the case for TCS. And of course, there are furloughs in seasonality, but margins are expected to expand on a weaker rupee as well as lower internal costs. Finally, what are we watching out for? Of course, the outlook on BFS, but more importantly, after Gartner suggested that they are likely to see about $3.9 trillion in client spending in global information technology, what can we expect from TCS's clients? That's going to be the key factor to watch out for.
Okay, and Agam, besides TCS, the other IT major reporting earnings today is also HCL Technologies, and that one's likely to maintain its growth momentum on account of IBM products acquisition. Tell us, what are the key expectations here?
Yes, absolutely. This is going to be the second straight quarter where, the entire acquisition of the IBM products will show up on the books. On the back of that, we're likely to see a 2.6% up move in dollar revenues. Rupee revenue is likely to see an up move around 3.6%. All sequentially, there could be a little bit of contraction in EBIT margins, considering there has been some cost pressures and a lot of investments going on for HCL Tech, and net profits likely to, however, rise as much as 4%. You've already spoken about IBM products acquisition, but besides that, there are also a lot of strong deal wins that the company may show up as far as top line is concerned. There could be a small decline on margins. Why? Because of residual wage revisions, and of course, on the other hand, you also have some cross-currency tailwinds that could partially aid margins. Finally, when it comes to the guidance, the company has already upgraded in its guidance in the last quarter to 15 to 17% from 14 to 16%, and there's a chance that they could very well will revise the lower end of the guidance higher from 15 to 16%. That said, we're just one more quarter into the financial year, so that may not be too much of a surprise, or for that matter, a big move, but a positive all the same. On the whole, we're expecting HCL Tech to do well as well.
Okay. Agam, thanks very much. So that's TCS and HCL Tech that you need to keep track of. The other Nifty major reporting its earnings is HDFC Bank. The numbers will be out tomorrow, though. The lender is likely to use tax benefits to make higher provisions in the quarter. Shefali Malik, she's here to put things into perspective. Shefali, over to you.
Well, it's expected to be a very strong quarter for HDFC Bank. That is pretty much evident from the kind of operational details that it put out just a few days back, with a very strong deposit growth of 25% on a YOY basis and loan growth of about 20% on a YOY basis again. But first, the basic numbers: the net interest income is expected to be around 14,184 crores. That's expected to be a growth of 13% on a YOY basis. Pre-provisioning operating profit growth of again 12%, and profit is expected to grow by about 26% to 7,060 crores. Now, coming to various details, it's all deposit growth of 25%, like I mentioned earlier, and that holds a lot of significance because it implies market share gains that the bank is seeing, and this stands against just 10% systemic growth. Loan growth again 20%, highest in at least 7 quarters, and again much above the systemic average. And also the bank had reported earlier that they had purchased loans from HDFC, which contributed 12% of the sequential growth. So if you adjust for that, the loan growth is about 19% on a YOY basis. And according to various analysts tracking it, it's a strong corporate loan growth and the festive demand as well, which aided the loan growth this time around. So we'll watch out for the mix of the loan book. Where has the maximum growth come in from? CASA ratio was also reported earlier. It stood at 39.5% at the end of the third quarter versus 40.7% on a YOY basis. However, marginal uptick was there on a sequential basis. Term deposits as well grew very strongly at about 4% on a sequential basis, but that's in line with the management guidance. Margins are expected to remain stable to positive in the third quarter versus 4.3% on a sequential basis, considering the fact that there has been a very strong deposit growth. So that may come to reflect in margins as well. And also we'll watch out for management commentary on retail demand outlook, and also especially the kind of traction that the bank has seen when it comes to the unsecured retail loan book. And other than that, we'll watch out for the asset quality. Has not been an issue for the bank ever, but only the agri portfolio, something that we need to be watchful for. And we can also watch out for some slippages to come in from the commercial vehicle segment, because that has been a concern for the system at large, and from their business banking book as well. So some estimates being put out by some of the brokerages, estimates for slippages. Investec is estimating slippages to be around 4,000 crores. That will be against 3,700 crores on a sequential basis. Macquarie is expecting slippages to remain flat on a sequential basis. But overall, asset quality is expected to be largely stable. And any word on any developments with regards to the succession planning, that will be very interesting to look forward to.
All right, guys, thank you very much. Shefali, Agam, Somit, really appreciate it. A lot of those stocks there coming up with results between today and tomorrow. Himanshu Gupta of Global Capital is joining us right now on the show. Along with him, we've got Ruchit Jain of Angel Broking. He too is here on the technical front. Ruchit, I'm going to start off with you. Last few days, a period of consolidation on the index. Does it look like it's setting up for a bigger upside?
Yeah, hi, very good afternoon. Well, if you look at the trend, then in this consolidation, there are no signs of the change in trend, because usually whenever there is a change in trend, the market breadth becomes negative, and that's where we see some signs of divergence. But such is not the case over here. Although in this entire week the index is traded in a very narrow range of about 100-120 points, the market breadth has been quite robust, and the up moves have also been supported by good volume. So we are expecting this uptrend to continue going ahead. I think this week was just a time-wise correction within an uptrend, and once this time-wise correction is over, we would resume the momentum for next milestone towards 12,500.
Okay. Himanshu, what about you? What's your take on the index?
Good afternoon. Well, clearly, this has been a typical bull run where after hitting the new highs, the markets have been consolidating. But as pointed by Ruchit, the breadth has been excellent. The mid caps, the small cap participation has been very well. Number of advances to decline has been improving. Number of stocks hitting new highs also has been very strong. So all in all, the trend is very strong. And if you even look at the trend from last 3 or 4 sessions, the markets are very well respecting the lows. On the front lines, we can see some kind of consolidation that was happening over a few days also. But even within this, that few sector rotation was being seen constantly. And in today's session also, we can, as we have seen that after opening gap down, we have seen some strong recovery in select sectors. And although we are seeing some kind of consolidation and correction in the stocks of metals and IT today, the outperformance has been shown by telecoms and the pharma stocks. So all in all, the stock looks good to us, and we expect the trend to remain strong. And in the coming days, the Nifty is expected to make new highs towards 12,500 and 12,700 in the coming days and weeks.
Okay, and 12,500 is something most of the analysts have been talking about now on the upside, at least if one were to look at the monthly series too. Okay, Ruchit, in terms of individual stocks then, what are you betting on this afternoon?
Well, first is the pharma index where we are quite positive on. I'll first highlight about the Nifty Pharma Index. In the first week of May 2019, we had seen that this index had reached its 200-day moving average, and after the month of May, for the first time, the index has crossed over and above the 200-day moving average. So I think even we have seen a good consolidation in last 1.5 months. So we could see resumption of a positive momentum in the pharma index. So my first call is from the pharma space only, which is a buy call in Glenmark Pharma. Even similar to the index, even Glenmark has consolidated in last 1 month, and today we can see a breakout from that consolidation phase. Also in the derivatives segment, we can see the price up move being supported by 10% increase in open interest, which indicates long positions being formed there too. So one can go long in pharma. These are the spot cash levels. One can buy with stop below 349 for near-term target around 380. And within the mid-cap segment, Supreme Industries is one stock that we are positive on the weekly chart. The stock too has given a breakout from its consolidation phase, and in last 1 month we have seen the price up moves have also been supported by good volume. So Supreme Industries can be bought with stock below 1205 for near-term target of 1370.
Okay, 2 buy calls from Ruchit. Himanshu, what about you? You too have a buy call on one of the pharma counters?
Well, absolutely. As just discussed, it's the pharma index that is suggesting the latest on the breakouts on the charts. And if we put numbers in perspective, I think above 8300, the index has a possibility to test levels of 8700 and 8900 going ahead. So yes, I am also going with one of the pharma recommendations, and I am recommending a buy on Dr. Reddy. The stock has actually given a very strong breakout above 3000 odd levels, and my sense is that in the coming days, in the short term, that stock has the potential to rally all the way towards 3150 and 3200 levels as well. So one can initiate buy in Dr. Reddy around current price, keep a stop below 2980, and I'm expecting a very short-term targets of 3120 to 3150. The second recommendation is from the banking pack. Now, interestingly, the Bank Nifty has been an underperformer over the last few days, and the low that has been made today is actually a very strong support. Not only it filled a gap, but also it has tested its 50-day exponential moving average. So if the broader markets have to perform better, they have to continue this trend. The Bank Nifty has to perform, and it has to show its participation. So looking into this Bank Nifty strength from here, I am going with a buy recommendation on Axis Bank. The stock is looking good to me, and one can initiate a long position in the stock around current prices of 740. Keep a small stop loss below 732, and I think the stock has the potential to move towards 750 and 770 even in the coming days.
Okay. G. Chokkalingam of Equinomics Research joins us right now on the show with his thoughts. Mr. Chokkalingam, good having you. Thanks so much for joining in. I'm tempted to ask you if you would be comfortable buying into any of the telecom or telecom related companies today at this point of time.
Certainly not. Certainly not. Very difficult call because one can consider Vodafone, but if he has a deep risk appetite, otherwise one should not touch it. On the other hand, Airtel looks good because the Airtel alone can survive along with Jio after paying this money. So therefore, but the stock has already risen a lot. So if there is any 5 to 10% correction, one can consider Airtel. Now the call on Vodafone is whether the company would survive or not, and which is very difficult to take at this juncture. So in case it survives, certainly Vodafone stock can give a good upside. So therefore, only people who can take a substantial risk can consider Vodafone.
Mm-hmm. Wow. Okay. Well, that's interesting. Mr. Chokkalingam believes that if you want to take a substantial risk, go out and take a Vodafone or a risk on that one, save some of the others. A lot of broader end of the spectrum stocks are doing well. Mr. Chokkalingam, let's make this conversation about that mid-cap end, right? Because that's the pocket which is doing so well. What has stood out in terms of results that have come out thus far? There are a clutch of them that are moving up. We saw some of the cable and datacom companies moving up, Hathway, Den, etc. Sterlite Tech, which got beaten yesterday, is up about 7.5%. A couple of other FMCG names too. What has stood out in terms of results declared thus far? Mid caps.
Not many results have come. Of course, Sterlite results have come. It is beaten down a lot. In fact, one can consider for medium to long term. because ultimately the optic business would do well because not many players are there in that industry. The stock also beaten down. But otherwise, not many results have come. Still, the stocks are rising because, as I've been saying for last 6 months or so, that the small and mid-cap stocks were beaten down much worse than what we saw post Lehman crisis. That time, Group B shares collectively fell 61%. This time, from the peak, they have fallen by about 64%. So we saw many small and mid-cap stocks trading at below book value or below free cash they are holding, or at the 4-5 PE. So now that the divergence is getting corrected, I think this would continue. And I firmly believe that 2020 is going to be the year of wealth creation from small and mid-cap stocks.
One of your previous recommendations, Chokka, was signed. How did you read into the numbers?
Certainly, it is better than the street expectation. And let us rate at the fact that the entire IT pack is not doing that great, with the exception of one or two, in terms of revenue growth or profit growth. In that context, Cyient has done very well. Why I like Cyient is that, as I've been saying, most of the consolidation deals have happened at anywhere 17 to 20 PE or 2 to 2.5 times enterprise value to revenue. So Cyient is now trading at 1.1 time enterprise value to sales, and also the PE ratio is only around 11-12 on 1 year forward earning. So I firmly believe that the consolidation in mid-cap IT companies would continue, and that would favor Cyient in terms of re-rating of its valuation multiple.
Rallis is the other one. Should watch out for that stock. It's up about 14%. Obviously, the trigger is the results, but the stock is really going strong. 16.5% higher right now at 223. But the bigger thing here is there more upside left? Can somebody probably even enter into a trade at even 223? Ruchit, what's your view on Rallis?
So we had a gap up opening today, and post the gap up opening, we had seen a good follow up move with very good volumes in the stock. So certainly the short to medium term trend continues to remain positive. And on the higher side, we could see levels around 255 to 260, which provides a decent upside, even though it is up by 15%. So I think yes, one can definitely enter fresh longs at current levels, also keeping a stop loss below 200 rupees for near term targets. First targets would be around 250 to 255 range, and if it manages to cross that, then the previous highs of last year's Jain could be achieved, which was around 270.
Okay, there are a lot of stocks which are moving around. Pull up IIFL Wealth that surged about 12 to 13%. I guess majority of the move has come in the last 15 to 20 minutes of trade. So watch out for that one. You've also got CESC. Now this one's in the futures and options market. 4% higher in trade. The futures indicating fresh long positions as the open interest there has risen by about 14 to 15%. Himanshu, coming on CESC with the action that we're seeing both in price as well as open interest side, would you take any fresh bet on the upside?
Well, yes, the stock has actually given a very strong breakout, supported by strong volumes as well. So I think 760 will now act as a very strong support for the counter, and on the higher side, 795 and 810 are two likely targets for the stock. So one can still look to initiate the stock around a long position in the stock around 770, 772 zone, keep a stop below 760. And my sense is that 795 and 810 are the likely targets for the stock.
One which has moved up is pull up Avenue Supermarts. I think just in the last 5 to 10 minutes of trade, you've seen the stock gaining. There is some buying which is coming around those levels of 980 or somewhere about. Remember, just few days back, I guess last Saturday, the numbers came out which were in line with what the street was expecting. They posted a good top line growth as well of about 25%. Mr. Chokkalingam, I think the key question for Avenue Supermarts is now going ahead will be sustainability of the sort of numbers that they've been posting. It's an expensive stock. What did you make of the numbers and at current levels? Does it look attractive?
No, certainly not. I will not buy the stock. The retail float is very low, and also they have to dilute the stake. And also understand the beauty of arithmetics. Arithmetics has own limits in the sense, the one biggest reason for large IT stocks to grow in single digit in dollar term, the reason is that the base of the industry has grown from, somewhere around $10 billion in 90s to $120 billion. Similar logic I would apply to Avenue Supermarket as well. The way they have grown in the last 2-3 years, the base effect would start playing out. It would be very difficult to maintain this kind of business growth, and the valuation also not cheap. So therefore, I will not buy the stock.
KPIT Tech, that's at 104 this afternoon. Emphasis at 902, that's doing okay for itself. That's up about 1.5%. SBI, though, in today's session, and along with the rest of the banks, is looking extremely weak. IndusInd Bank now post results is trading at 1353. So from levels of about 1560, 1570, the stock's now down to 1350. Will this be an opportunity, according to you, Chokka, to get into an IndusInd Bank? Or the overhangs are still looming large. We still need to see at least one quarter, where there are no caveats to the earnings before we actually, start investing in this bank.
I would not buy IndusInd Bank because it is still trading around 4 times price to adjusted book value. So instead of considering IndusInd Bank, I would consider ICICI Bank. If you take into incorporation the valuation of the subsidiaries and joint venture, the core banking is trading at around 2.5 times. So ICICI Bank is far superior to IndusInd Bank. Still, there is a lot of potential in unlocking value from JVs and subsidiaries, and also the re-rating would happen for the core banking business. So therefore, I would prefer ICICI Bank to IndusInd Bank.
Okay, prefer ICICI Bank to IndusInd Bank. Let's see how ICICI's numbers pan out for the December quarter. All right, moving away from these biggies and apart from telecom, the stock of the day has to be Rallis India. The stock has seen its biggest one-day jump since March 2015. And this is after the company delivered a strong operational performance in the third quarter with EBITDA doubling and margins too expanding. Yash Upadhyay is here to take us through all the details and what stood out in the numbers this time around. Yash, over to you.
Good afternoon, Navneet. So extremely good numbers from Rallis India. Like you rightly put, their revenues have grown as much as 28% on a year-on-year basis. Their net profit has more than doubled. But what's heartening is their operational performance. We've seen margins expand by almost 390 basis points, coming in at over 10.5%, as well as their EBITDA going up by almost 2 times to 56 crore rupees versus 28 crore rupees. Now, what's aided their performance in this quarter is that across the board, we've seen growth come in, not just their international business, which has been doing well over the last several quarters, but the domestic business, that too has managed to do very well in this time around. So their domestic business alone has seen a 35% growth in the third quarter, while their international business has seen a 24% growth on a year-on-year basis. Higher volume growth, lower raw material prices, as well as improved product mix, that has aided their margins, which have come in at 10.5%. And what's more important is that they've launched 2 new formulations in the quarter gone by. Now, what the company has also said is that they are on track to launching another new product this year, and that would take the number of new product launches for this year to 7. But going forward in the next 3 to 5 years, they are expected to launch 11 to 12 new products every year as far as their domestic business is concerned. Now, some of the key changes that have been seen in their strategy that Investec in its latest report has highlighted is the fact that the company has extended the credit period given to the dealers from existing 30 days to 60 days. They have also improvised and changed the incentive system for dealers, and on top of that, they have also managed to widen their distribution network. So they've added 330 new dealers in the 9 months of FY20, and that has helped them do very well. As far as their capex plan is concerned, they are on track to expanding their capacity in Dahej, where they will be setting up a new chemical plant for which the production is slated to begin in FY21. But that apart, their backward integration plant of metribuzin phase 2, that too is going to start commercialization. It has a total capacity of almost 500 million tons per annum, but it will start its business from February of this year. Having said that, also let's take a look at the graphic dashboard for Rallis India and how do things look like over there as far as the volumes and the analyst recommendation is concerned. So as you could see over here, the stock has gained substantially. The volumes too are at almost 2.9 times, which is the highest that we've seen over a very long time for the company. Let's take a look at the analyst recommendation, and across the board we've seen that 12 out of the 22 analysts that cover the stock have a buy rating. But what we've seen with today's gain is that the return potential of the counter has turned negative. Why is that so? Because the analyst target price for the 12-month period stands at about 189, and the stock has already breached that mark. It's at 222. So we could see either a re-rating happening over here, and a couple of brokerage reports that have already come in, they are extremely bullish. MK for one says that their growth plans, especially when it comes to their export business with the domestic market too showing healthy recovery, is likely to aid growth going forward, along with their new product launches. That makes them extremely bullish, and that's the reason why we could see a potential re-rating for the counter. And most of these agri names, they seem to be doing very well.
Okay, Yash Rakesh Jhunjhunwala will be a happy man today. He has over 9% stake in the company. And not to forget, it's a subsidiary of Tata Chemical, which is also sitting at its 52-week high. Mr. Chokkalingam, before we thank you, any recommendation so far, whatever earnings have come by, or any stock that you're looking closely for this calendar year?
Not on the basis of published results of Q3, but I can share two ideas. One is Indigo, second is Dhampur Sugar. I believe Dhampur Sugar can give minimum 40-50% return this year itself, because among all the states, only UP state is showing uptick in the sugar output in the current sugar season. All other states are showing a degrowth of anywhere from 12% to as high as 60%. So this time there will be a sugar rally, but that will be enjoyed by largely these UP-based sugar companies. And among all of them, I recommend Dhampur because all 4 sugar mills are in UP. It's among the largest ethanol producer. And I believe this stock has a lot of potential. Even if I assume around 7p on expected earning of FY21, this stock can touch around 330. Second is Indigo. I firmly believe that Indigo can create a substantial wealth in the next 1 to 2 years. I firmly believe that the oil price will crack in a big way. Despite US-Iran tension and Iran producing only 10%, Iran exporting only 10% of oil compared to what it used to export. And with all these issues, the oil price still cracked 8% from $70 to below 65. And already Russia indicated its reluctance to continue with the compliance cut. So therefore, I believe oil price can fall substantially this year. And that would be positive for Indigo. Plus, as all of us know, the jet airways is down, and I have my own view that it is going to be very difficult to revive. That also would be positive for aviation leader, namely Indigo.
Okay. Mr. Chokkalingam, we'll leave it at that. Thanks much for taking the time out and being with us today and giving us your perspective. Well, Mr. Chokkalingam believes that if you're not a risk-averse investor and can take a high risk, Vodafone Idea might be a good stock to look at. But that stock is bearing the brunt of the Supreme Court ruling on the AGR issue. But as a result of all the issues that the business might face in the future or currently as well, Franklin Templeton Mutual Fund has marked down the debt securities of Vodafone Idea in the portfolio to zero. Let's discuss the implications of this with Kirtan Shah of Ambition Learning Solutions. Kirtan, good having you. Thanks much for joining in. Just a quick synopsis. I presume from whatever little we learn, all of the funds under the Franklin portfolio have been marked down for the Vodafone exposure.
Correct. So, Neeraj, there have been 6 funds at Franklin that have been holding Vodafone, which is the Franklin Low Duration, Income Opportunity Fund, Credit Risk, Short-Term, Ultra Short-Term, and Dynamic Accrual. All of these funds have marked down Vodafone holding to zero. Yes.
No other AMC has done this, because I presume there are 2 or 3 others which we have information about which also have this exposure. None of the others have done it, right?
Correct. So there are quite a lot of other fund houses who also hold the similar paper, but none of these guys have yet done it. I think, according to me, this is a preemptive move by Franklin, because after the AGR issue or the result that came out yesterday, this could have actually led to a run on the fund because of the kind of holding that Franklin has with respect to Vodafone. And generally what happens in such a situation is where, you have to give exit options to investors because they want to come out of the fund. And there is no liquidity in Vodafone, the paper, because nobody's going to buy. You will have to actually end up selling some good part of your portfolio to make good for the redemption. And this actually leads to a big chaos. Is because you can't get rid of Vodafone. You have to sell the other part of your portfolio probably at a discount because you want to get out of it. And that increases the Vodafone or the bad quality paper in your portfolio higher than it originally was, creating a mess in the portfolio. And I believe that this is a learning that Franklin got from the JSPL situation that happened in the past. And I think which is why a preemptive move from Franklin, where they've reduced it to zero, trying to make sure that investors don't exit.
Other fund houses haven't seen any kind of run in their portfolios, Kirtan. The ones which haven't marked down.
Correct. So, I see, ideally what happens is most of these fund houses are not holding as much as Franklin is holding in Vodafone papers. And the concentration risk, though, has come down over a period of time, but it is still slightly higher for all of these funds. And the best of my knowledge, I think this is just a preemptive move. They don't want investors to redeem, and then when it becomes a degraded or some downgraded paper and the NAV takes a hit, instead of removing the money, then I think probably what Franklin is trying to do, to the best of my understanding, is downgrade it further right away before the downgrade happens. By that, what all that they're trying to do is try and save as many investors as they can to kind of redeem.
Yeah, sure. Just Kirtan, one last thing. I think they've also reduced the inflows that new investors can do in order to safeguard the paper of the existing investors, which is also a pretty prudent thing to do, I presume.
You see, ideally, as per the SEBI regulation, unless the debt is not below the investment grade, which is BBB minus, you cannot actually segregate the portfolio. And because as of today, CRISIL and CARE both rate Vodafone at BBB minus, which is an investment grade, Franklin cannot segregate the portfolio. So the only opportunity or the option that Franklin really had, because it could not segregate the portfolio, is to mark it down. And now that they've marked it down, which also means that if new investors come in, they also get a pie of the markdown of the Vodafone paper. And tomorrow, fortunately, if things turn out to be good and Vodafone has to be upgraded, the new investors who enter in the scheme at this point in time will get an advantage of the upgrade, which is why what Franklin is trying to do is minimize the impact and the advantage of new investors as much as they can, which is why they've reduced the intake to 2 lakh rupees per PAN per day.
Okay, Kirtan, we'll leave it at that. Thanks much for taking the time out and being with us and giving us that perspective.
Thank you so much, Neeraj.
Well, more on that, not really just the Vodafone paper, but Sanjay Kapoor and Nitin Soni weighed in on this Vodafone issue as well. Here are what they had to say.
There was a slim chance that the industry was hoping for, where some respite could have been given on the AGR, but that was not to happen. And what we have in front of us is reality, which probably is very difficult to unwind despite any review petitions, etc. going forward. With that, I think the biggest thing that happens in the Indian telecom industry is that we downgrade the structure of the industry from an oligopoly to probably a duopoly. And this I'm based on the comments that I've heard from the promoters and shareholders of one of the companies who have said that it might be very difficult to continue. And if that is true, then we've come a full circle. We started with a duopoly in our country in various circles and finally experimented with oligopoly, then competition, perfect competition, then hyper competition, back to oligopoly, and now back to duopoly, it seems. So I think that from a sheer structural perspective cannot be a good news for the industry, because world over people have experimented and finally settled down for an oligopoly for various reasons. One, it's good for the competitors, it's good for the players because it provides the right impetus on competing in the market and on sharing costs, etc. And finally, for the stakeholders who have 3 or 4 players to fall back on, because otherwise if one rejects you or 2 rejects you, you have nowhere to go. And finally, it becomes a disaster also for the passive infrastructure companies who earlier had multiple tenancies but now are really grappling and fledgling to find a second tenant. And in this sort of a scenario, if the 2 obvious players that we all know will stick back, then there are no tenancies, because each one of them builds their own towers and there's very little sharing that they've done up to now, unless and until things grossly change as we go forward. So I think what has happened has happened. What worries me is how do we take the equation from here? Because we have an industry that is very capital intensive. There are asks on return on capital deployed, because the biggest gainer so far has been the government of India, that has probably garnered the maximum revenues out of this industry over a long period in time. Then there is a changing technology which earlier used to last 10 years, now probably lasts 5 years. And in the midst of all this, there's a growing consumer demand, unsatiated demand around consumption of data and streaming of games, etc. in future. And then finally, a technology like 5G staring at you, which is essentially high speed, low latency, and Internet of Things, which will require really a very dense coverage, because we can't afford dark spots if we have to give low latency options and use cases to our customers. Given all this, how will this equation balance out given the current prices and returns in the marketplace? Who will invest in this industry? And Vodafone's exit, if it happens, is not a good news or confidence enhancing for anybody across the globe to put in money in the Indian telecom market. So I think we really have a serious problem going forward, and we must address it, because unless and until this equation is balanced, I guess we will be really into trouble even in future.
Do you see a structural change happening here, Nitin? And the market for now seems to be okay with the fact that, if at all Vodafone does move out and Bharti does become a dominant second player in the market, it's okay with it. Bharti Airtel is in fact up in the session. Do you see a case for change in ratings for the industry as a whole?
Yeah, thanks for having me on the show. So let's talk about Vodafone Idea first. We don't have a rating on Vodafone Idea, but it's a big setback for Vodafone Idea, given we believe that they don't have the balance sheet to raise a large amount of money to pay for these AGR dues. And as the management of Vodafone Idea publicly has stated, that they will shut shops and exit the industry if they were to pay this large sum of money. So I think it's a case where now Vodafone Idea will start rapidly losing market share, and they may not be able to pay this large money unless some miracle happen in terms of equity injection by the sponsors, which seems unlikely. Secondly, on Bharti Airtel, we rate it at BBB- with a rating watch negative. We were looking out for three things on Bharti. The first is the AGR, which has now been rejected by the Supreme Court. The second is the 2 billion equity injection, which is already completed. And the third is our assessment on the EBITDA growth from the recent tariff hike, which all the telcos announced effective from 5th of December. And I think the fourth point is, what if Vodafone Idea starts rapidly losing market share now, then a good chunk of subscribers will also come to Bharti. Even assuming that Jio will take a large chunk of that subscriber and Bharti gets, maybe 30-40% of that chunk, it will still be incrementally positive for Bharti in terms of the EBITDA growth from those additional subscribers.
All right, that's the view coming in on the AGR issue. But shifting focus to Piramal Enterprises, which has signed a definitive agreement to sell its healthcare insights and analytics business for almost $950 million. The transaction is expected to be completed by February end, but it's also subject to shareholder approval. Darshan Mehta caught up with the Piramal Group chairman, Ajay Piramal, to understand the rationale behind the deal. Listen in.
This business really is in data and insights, and this is a business which is a global business, and in fact there's no sales in India at all. So it is a business which is the sales take place mainly in the US, Europe and Japan, and we thought that this business, we need to grow it because there are opportunities to grow, and the best way to grow it is to have a certain size. So Clarivate, who has going to be taking over this business, is a $1 billion company. Besides this, I think we got a good valuation at $950 million. This is a 5 times multiple of sales. And so I felt that it is in the best interest of our shareholders and our employees that we have Clarivate as a owner.
When you had invested in it, what was the vision that you had? Do you think that at this time when you're exiting it, all the targets that you had envisaged at that point of time have been met so that you would want to exit?
So when we invested it, it was in 2012. We had paid a consolidated amount of $650 million. But at that time, the dollar was 50 rupees, and now it is 72. So overall, we made a decent return on this. And I think we wanted to focus really on our financial services and pharma business, and we felt that the value that we were adding to it from here would not be equal to the value that a Clarivate could add.
Is there any kind of non-compete that you sign, which means that you would not be able to enter this business at least for the next few years?
There is a non-compete as far as data analytics for the industry, the healthcare industry, for the next 3 years in the markets that they are in.
So you will get these funds in the next few months once this deal is closed. What will these funds be used for?
These we'll get the funds by the end of February this year. I expect that the deal should get closed. It's subject to our shareholders approving it, and we've called for a extraordinary general meeting on the 13th of February, and after that it should get closed. At the moment, we will use these funds to just retire debt, so we'll have about 6,500 crores, which will be used to retire debt today. And over time, we will see opportunities for how we can invest it and grow.
Okay. One concern that the market has, and I just wanted more clarity on this, is this the reason, one of the reasons which the market also speaks about why this deal is done? Is it because there are concerns that the other businesses are facing? We've seen what's happened with the financial sector. We've seen what's happening on the real estate side. So as something to come, probably shareholders what they are thinking. Was this a forceful exit, or is it because you want funds to allay concerns what's happening on the other side of the business?
I think first of all, let me clarify that this is a good return, and I have been always saying that if we get a good return, then we would like to monetize it. That's one. If you look at the history of our group, we've always looked at everything in the best interests of shareholders. So whether it was when we sold out the Abbott transaction, or when we did the Vodafone, and when we've done DRG, it's always been that we believe that our role is to do what is in the best interests of shareholders. And we felt that at the value that we were getting, this was the best interest of shareholders. It's not because we have problems in other businesses, because we are in the midst of raising a rights issue, and I think with the preferential issue which CDPQ has put in and rights, we'll get about 5,400 crores. So it's not a matter of cash for the existing businesses.
Just one final question. So with this money, are you comfortable with the debt situation? You spoke about it will be to retire debt, but overall, are you happy with how the debt situation is facing out for Piramal?
In fact, our debt equity ratio is now it's below 2:1 with all these funds coming in. So it will be, we will need to see how we can use the equity in the right manner. I look at the whole financial services play now as a consolidation play, and with so much of equity, this just gives us that much more room to take advantage of the consolidation.
Ajay Piramal in conversation with Darshan, and the stock is up about 5.5%. It's probably not part of Sharath Dubey's list of the Fab 4 stocks of the day, but what is? Let's get to him, because a bunch of stocks are flying around. Sharath, good afternoon.
Good afternoon, Neeraj. The first stock is Garwell Technical Fibers. The stock is up more than 10% today, and it's one of the top gainers in the Nifty 500 index itself. Over the last 5 trading sessions, the stock has gained almost close to 20%. Up next is Torrent Pharma. The stock is up almost 4.6% after fresh longs is seen with a high open interest of almost 47%, and the volumes trading at almost 6 times its 20-day average. Next stock is Music Broadcast, which is up almost 3% today, as the company has stated that it will consider share buyback on January 27. And the last stock of the day is Piramal Enterprise. It has actually made it to my list, and it's up almost 5.5%. Its highest level seen in almost 2 months, and which will sell its healthcare insights and analytics business to US-based Clarivate Analytics for a deal valued at almost $950 million. Back to you.
Well, thanks a lot for that, Sharath. So, do watch out for some of those names, since Piramal is right up there. It's an important stock to monitor. Mind you, a bunch of these healthcare related companies have done so well today. On the large cap space, Sun Pharma is rising at the broader end of the spectrum. We have Torrent Pharma at 52-week highs. There is Narayan Hridayalaya and Apollo Hospitals trading at highs too. So healthcare related companies are all buzzing. Deepak Shenoy of Capitalmind joins us with his thoughts on the show. Deepak, good having you. Thanks so much for joining in. Interesting businesses, chalk and cheese each of these, but do you, as you see the landscape, Deepak, do you reckon that this sector which has been in in the doldrums for some time now, finally making a bit of a comeback? Do you guys at Capitalmind or rather believe in the prospects of this space?
You're saying about telecom or
healthcare and healthcare related companies, Deepak?
So I think, Neeraj, the pharma-related companies haven't done very well, though, and we've kind of reduced our focus on those companies per se. The hospitals and part of the healthcare space, in fact, Piramal was part of our portfolio till last year, and then we kind of let it go. But the problem with Piramal at the time was simply the exposure on the housing and the developer front. The pharma business is always something that, as a deal maker, I think a lot of trust is there in Ajay Piramal's, deal making capabilities, and then he's demonstrated again now. This gives them a cash forward, it reduces their debt levels. And one thing for their favor is they're consistently being able to raise debt, even at the short-term level, from the markets. A lot of other players in the NBFC space, which seemingly are in trouble, are simply not able to raise any debt at all. So that way, there's a little more confidence, I think, in the fact that there is an additional business. There is not so much of a leverage in the overall business itself. So I think Piramal is a very interesting play there. And though it's not, I think it's more an NBFC play than it is a healthcare or a pharma play. But in the healthcare area, I think what should eventually get related is diagnostics and hospitals. Pharma will take at least a couple of years more, pure drugs or pure pharmaceuticals or APIs. I think will take a couple of years more before they kind of realize any action. So I would take them in that kind of order, though we have very, very, very little in our portfolio on this sector.
Okay, that's the pharma space, which is buzzing in today's session. And in fact, if you look at Piramal Enterprises for the week, the stock has done pretty well now. We've seen gains coming across all through the week now. Intraday, of course, today it's up 5%. In last 7 days, as you can see on your screen, it's up 10%. Hi, Deepak. Good afternoon. Telecom is on top of everybody's mind today. And considering now, of course, it's been debated, analyzed since morning. But what is your take been? The sort of returns Bharti Airtel has just not given today, but in the last 3 months, is it there in the portfolio? Are you looking at Bharti Airtel at current levels?
Yeah, we've been actually long Bharti for a while. We actually bought it even before the rights issue and asked our customers to look at the subscribe to rights as well. There's a good reason for that is that we believed that idea would probably hurt a lot, even though after the merger with Vodafone at that time it was the highest subscriber base in the country. We thought that would very quickly erode. It's happened. The two big beneficiaries are Reliance and Bharti, and we have been long both of them in the portfolio. So there has been a kind of a return that's been kind of good, but I also feel that the government needs to now take some kind of action in order to ensure that this is not going to be a two-player field. BSNL is hardly active. So we should think of, at some level, either providing a payment moratorium, a reduction of interest, or a modification to the scheme that would anyway probably be required so that GAIL and Power Grid don't go bankrupt. So I think in that context, there's probably some expectation that the government will do a little bit now. If Vodafone goes under, it will hurt the banking system much more than it would hurt the telecom sector. In fact, the telecom sector means Bharti and Reliance will only do better if Vodafone were to die. So I think at this point, you would have to have some kind of a package that involves either the government taking a stake in lieu of the payment that it is supposed to receive, and into Vodafone, and perhaps over time shedding that stake back, because that's really the only way that Vodafone will survive. If the government just insists that it has to get paid, then this is going to head to bankruptcy court. So positive on the two other players because of this. Quite interestingly, it's rocked the debt markets also. Some mutual funds have taken a big hit. today because of the AGR ruling yesterday would have caused a lot of investors to exit. So the crisis is spreading on the non-telecom front, but on the telecom front, the two largest players are like laughing all the way to the bank, perhaps. Just to put a phrase on it. It's just a little too early to say, but I think one of them, the chances here are either Reliance and Bharti are outright winners, or that idea does survive, but limpingly so, and even then Bharti and Reliance will be winners. So it's pretty easy to bet on one of those today.
Okay, while we keep an eye on Bharti Airtel and Vodafone Idea both, but also keep an eye on Infratel, which is corrected about 8 to 9%. If in case Vodafone collapses, Infratel loses its revenues as well. So that's the reason why Bharti Infratel is down about 10 to 10.5%. Very quickly, I just want to get a technical check before we move on to our dealing room check. Himanshu, on the charts, is there any call that you would give, or let's say if somebody is holding long positions in Airtel, short positions in Infratel, would you advise them to cover those positions, or they can carry home the positions?
See, as far as the position in Infratel is concerned, I think one can carry the short positions, and the short-term setup is still looking weak. I think one can maintain the stop loss above 228, 229, and in the immediate short-term targets of 200 are likely to be seen in this stock. And as far as Bharti Airtel is concerned, I think that stock is looking strong, and one should continue holding on to this stock. Keep a stop loss below 490. I think in the next week, levels of 520, 530 are looking possible on Monday or Tuesday.
Okay. Ruchit, one quick follow-up. How would you look at the charts of Grasim? The stock has just suddenly spiked.
I think we had a gap down opening today, but from the post opening, we have seen a good recovery. But Neeraj, frankly, if you see within the cement space, also last 2 weeks we have seen a good bounce in most of the cement names. But Grasim has not participated in the up move. So I would wait for a breakout about 785, which is a 200 DMA, before entering any rounds. At current levels, I would advise to avoid any kind of long positions over here.
Okay, it's time to take a look at what dealing rooms are recommending in the session today. Darshan is here with his channel checks. Darshan, good afternoon. What are you learning?
Good afternoon, Neeraj. And over the past few days, we've been speaking about how some of the pharma stocks have started seeing accumulation. Today is the large cap pharma, probably second or third largest company in India. So it's there between DVs and Dr. Reddy's. They're pretty much neck to neck right now. 3.5% upside here. There was very strong commentary. So what happens is every year there is the JP Morgan healthcare conference, which is pretty much the biggest event that any pharma company can attend. One of the biggest events there, and what companies say there matter a lot because it has global coverage. So Dr. Reddy's there gave very strong commentary there. We spoke about how Apollo Hospitals also yesterday gave rather strong commentary at the JP Morgan conference. So on that traction, there is enough accumulation by some of the foreign as well as local funds. Decent volumes today. So Dr. Reddy's is something we're watching out for. IIFL Wealth, look at the traction that's been seen on the counter. Now 67,000 shares volume on not of the most liquid counters. It's up almost 13% in trade today. What dealers indicate, a large US-based fund is the active buyer in the counter, and probably there could be more potential buying that could come in onto the counter. And as a theme, as we've been speaking about pharma, tires is also one theme that we've been regularly talking about, given the fact that there is a lot of traction, how prices have moved. MRF is trading at a 52-week high. Balkrishna is trading at a 52-week high. There is enough traction that's happening in Apollo. With the mining sector started to revive, there could be traction on Balkrishna industry. So we've been speaking about this, and dealers believe that overall the momentum will continue with the news coming in terms of duty that will be put in imports. That could significantly impact and better the financials of these tire companies. So tire as a theme has been doing well, both on the fundamental side and the technical side.
Yeah, well, really good going out there. Thanks a lot for that, Darshan. Well, lots of talks also about how could there be some dollars that would come in the budget. So, these things keep on happening out of the budget. But Deepak, Shenoy, whether or not there are measures which help the space in the budget is one thing. Arguably, if you look at the valuations, they are not quite skyrocketing. Do you like this space, the tire companies?
So, the tire companies will have different impacts. I think the MRF CAT, Apollo, JK Pack are more mainstream. Therefore, will require an auto revival as well, not just duties from abroad. That will have to be put in just to restrict or to create demand, because replacement demand is just normal, and you need some kind of primary demand as well. But at the same time, Balkrishna, for instance, has a much larger set of SKUs. It's not very standardized set of tires that they may manufacture. So an industrial revival in Europe does tend to impact them positively. Not so much in India, but I think they have some plans for exporting to the US as well. Very early days. There has been some capex that's going on or in progress, which is why the stock actually fell from the 1,400 levels. As a disclosure, we own the stock, so quite interested in it. The stock fell from 1,400 to 750 rupees and is only now recovering halfway down. So, of course, it's still not cheap. It's the most expensive tire company, but it's also the only tire company that consistently makes more than 20% margins. And one of the reasons for that is it's a low-cost producer in a space where there's very little competition, because nobody else has the ability to manufacture so many SKUs other than maybe a Michelin or a couple of players, so the number of players are restricted there. So more interested in Balkrishna, not yet interested in the rest of the pack. I think MRF would be an interesting pick if I could see the revival of auto demand come back, and I think that may be about 3 or 4 months further away from where we are right now.
Deepak, when I look at the new listings, one of them stands out, IRCTC, 1021 now, continues to rise and shine. So a PSU name which is creating wealth and people are liking it and continuously liking it. Today too, the volumes are high. Have you studied this business at all? Do you have any thoughts here?
Yes, we're long on it. So disclosure, very, very interested. In fact, when it came out a few days before the end of the September quarter, they actually introduced this 15 rupee plus or 20 rupee booking fee per ticket that they're suspended since 2016. They do about 30 crore tickets a year. That adds a 450 crore to 500 crores to their top line. On a yearly basis, this year it will be half. But that consider this, that the company makes 270 crores in profits. It did that into the FY19. If you consider that they'll add 450 crores to top line, a lower tax rate of 25%, the fact that all the expenses remain roughly the same, the booking fee is just an additional revenue, that will add nearly enough to be able to more than double their profits just by that alone. And then there is the 8 or 9 plants more that are coming for Rail Neer, which is the water that they have a monopoly over supplying on platforms. The fact that they are actually buying more trains and operating them. I think one of the trains opened up today as well. Expensive train and reasonably full, it turns out. There's also the fact that they have been doing some interesting work around platforms, providing executive lounges in a couple of platforms in South India, just as a test. That might be another revenue source for them. Because they have more or less monopoly rights on many of these businesses. It gives it a very attractive feel, but you have to remember that it's a government-run company, so at any point, strange things in management can easily happen. So you have to give it a little bit of discount for that. Adjusted to all of that, we still feel that the stock has some potential more. It's worth, I think, probably a lot more than this from where we are seeing it, but we'll have to track progress. So we're quite happy to be long at this price. So there will be a price where we won't buy anymore, but I think that's at least 50% away from where we are right now.
50% away from the current levels. Okay, let's quickly get you some closing strategies from our techies as well. Ruchit, a few minutes to go for markets to shut shop. What's your top BTST or STBT idea?
One of the mid-cap pharma names I would recommend from the cash segment, which is Alembic Pharma. Well, no, after a consolidation of about 1.5 months, the stock has given a breakout above its resistance of 590. And we see today the volumes are also quite good on this up move. So I think we should see a good follow-up move in this stock during next week. At current levels, for a BTST perspective, one can buy with stop below 580, keeping for target around 630.
Okay, looks like Pharma 2 is the flavor of the day. Himanshu, your top call? Closing strategy.
I think Castrol is one stock that's showing a lot of strength in today's session. So that's a stock that one can carry for long positions for Monday for a target price of 142 and keep a stop below 136.
Okay, Deepak, Shenoy, before we thank you, any stock that you guys are looking at Capitalmind closely where fresh investment can be made?
Well, we have the same portfolio. We are actually very boring. We keep buying the same kind of stocks all the time, but we're quite positive. We've been positive on Garware technical fibers for a while. We continue to market a buy as a position, and IRCTC is something we discussed right here. Continue to be long that and going up. So I would just say putting more cash into the same names makes sense. I'm not really looking at new names unless results come, and then we can get a better handle on the current situation. Current results haven't yet, come in broad enough for us to be able to say take a new call right now.
Well, Deepak, if the existing stocks in the portfolio are giving returns, it's okay to be boring. Have a good weekend and thanks a lot for joining us today. Ruchit, a call on Berger Paints. The stock is at all-time high or 52-week high levels. What do you do here?
I would say if any existing long positions are there, they should continue to ride this trend because there are no signs of reversal, and in fact the momentum readings now are indicating that we may see continuation of this move. On the high side, as per reciprocal retracement theories, targets are seen around 590-600 range, so we could see some good momentum continued in next week as well.
Sure, Reliance Industries, numbers come out anytime post market hours now. If somebody is holding longs, what would your advice be?
So in Reliance, I think one should continue to hold long positions. The stock has actually reversed after testing its 50-day moving average, and I think this is one stock that is in its bull run of its own. So one should keep a stop below 1550, 1555 and continue to hold on to the long positions. Once the stock starts to move above 1595, 1600 odd levels, which is a gap for the stock, I think the stock will resume its uptrend once again and will continue to move higher highs.
That's a Reliance for you, but just a few minutes to go for markets to shut shop. So let's go across to Neeraj to find out how exactly today's closing is panning out. Neeraj.
Well, the Bank Nifty is actually given up some of the recovery that it had shown at the midway through the trading. Remember, at the start of the show, we were down about 0.5%. Now we are down about 1% again. So the Bank Nifty is under a spot of bother. The large caps have done okay. I think the mid caps and the small cap indices too have not done too poorly for themselves. So those two indices will also come up on your screen. I think there the traction is still there. It's not all that poor, but the large caps, at least the mid cap space, has some traction. But let's talk about individual movers in trade today and what's done well. Bharti Airtel, top of the draw, top of the pile, 5% higher. Dr. Reddy's and Reliance, then number 2 and number 3. HCL Technologies ahead of the numbers today, up about 1.5%. Don't quite see TCS there, but HCL Tech certainly up there. Maruti Suzuki, Bajaj Finserv, Z Entertainment after a while in the top 10 list as well. So, well, but it's a flattish morning really, a flattish afternoon for this one. What's not done well? And I'm sure we'll mark Vodafone Idea, but Bharti Infratel 2 on the index down about 10. IndusInd Bank has a loss. BPCL has corrected 2% now. There's weakness in SBI, weakness in IOC, weakness in Coal India as well in the session today, and ICICI Bank down there. So SBI, IndusInd, ICICI Bank are amongst the stocks that are under a bit of pressure in the session today. That's the large cap universe. Navneet, what about the broader end of the spectrum?
A lot of movers, Neeraj. In fact, this week it's been all about the stocks in broader markets. Even the indices would have given you better return than the benchmarks. But let me begin with a couple of gainers. Berger Paints touching fresh 52-week high. And remember, the stocks showing you some bit of momentum coming back in the last few days since the time crude prices have cooled off. So this one's closing with gains of 3%. Piramidal Enterprises, of course, gaining today after selling stake in one of its vertical, and the management also highlighting that they will be using this money to retire debt. The stock up about 5%. DMart, in the second half of the session, there was some buying interest which came back. And as you can see, actually, the stock stocks closing at the highest point of the day, very close to the mark of 2,000 rupees. IIFL Wealth Management, Darshan also highlighted in his dealing room check, not a very liquid counter, but buying momentum coming in here as well. The stock closing with gains of 12%. Torrent Pharma touching live highs, and this one on the future side saw significant OI build up as well, telling you even at these higher levels, traders were betting on the long side. Siemens is the other one of the other F&O stocks which performed well today. So closing with gains about 3 to 3.5%. And result reaction for Rallis India. Across the board, the numbers look good. Good operating performance, good performance on top line as well as bottom line. The stock gaining 13%. And the tire company is doing well. Among that, MRF may not be very liquid, but touching 52-week high in today's trade. While you had certain losers as well. So Idea, of course, we know why the stock corrected, and a deep correction coming 25%. Of course, it recovered a bit from its opening levels, but still remains to be seen what happens if government intervenes here, some relaxation comes about, or we are headed for a two-player industry. Motherson Sumi, after gaining yesterday, once again lost steam today. So this one's down about 2 to 2.5%. Trading at 52-week high. Indian Energy Exchange has been witnessing profit booking for the second straight day now. And IDFC First Bank correcting in trade because of its exposure to telecom sector. And the stock finally shut shop at levels of 43.5, Davina.
A fairly sober week we've got for the Nifty 50. It's been a good one, though, for the broader markets. The Nifty Bank has taken a back seat. This entire week, you've seen selling pressure building up. 300 points lost in today's trade as well. For the Nifty 50, we're absolutely flat, losing just about 9 odd points. Coming to the contributors then on the week gone by and what the index has done along with the broader market space. This is the point contribution today. Ahead of numbers, Reliance Industries, Bharti Airtel, Maruti, Dr. Reddy's have done well. What's not done well is the banking pack. Coming to the weekly performance then, and what's gained ground and what's lost. You've got Nifty, which is up almost 1%. So for the index itself, it made record closes this week. Earlier this week, and these are the stocks and how they performed, including today's 5% gains. Bharti Airtel is your top index performers this week. Z has moved up as well. Hindustan Unilever, Nestle, Britannia, so your FMCG pack also stacks up in the top 5. And what's lost out is Bharti Infratel, Yes Bank, IndusInd Bank posts its numbers, State Bank of India too, which has been down 4% this week.
All right, while Nifty gave you returns of 0.8% for the week, let's take a look at the mid-cap index, which has been in focus. And there you go. That's a good outperformance, up 4% for the week. And this is coming after a really, really long time. So a couple of gainers. Imami, you saw majority of the gains, I guess, coming in today's session, up 16%. Prestige Estates, we've been highlighting how the stock has been an outperformer. And of course, your city gas distribution companies, Credit Suisse and CLSA, this week came out with their notes. They are bullish on the space. So Mahanagar, IGL, both of them gaining between 12 to 13%. And you had something like Tata Global Beverages, which traded at its life high levels, and also a couple of other gainers. Remember, pharma stocks have been gaining. So one of them in the mid-cap index, Ajanta Pharma, gained about 9%. On the losing side, you had something like Indiabulls Ventures. I think the positive takeaway among the losers that the losses, Davina, are restricted, barring ventures, between 1 to 2%. So no major losses seen among this particular index constituents.
Yeah, it's a 3% outperformance. So and it's no mean feat. GMR Infra, though, already started seeing that rally, I think, 2 weeks back from levels of 21 to 24. So this week sort of gave back a bit. Getting in closing comments from both our technical experts. Ruchit, I'll come to you first on what is it that you're going to be watching out for Monday.
Frankly, on the index fund, 12,300 to 12,400, this is the range where we had seen trading in this entire week. So I think the 100-point range just seemed to be a time-wise correction, but the focus has certainly been on the broader market, specifically the mid-cap names which have been outperforming. And one of the index that now I would focus on during next week from Monday's session is the Nifty Pharma. Today we have seen good momentum from stocks across the sector in pharma, where the up move has also been supported by good volume. So I've already have given 2 buy recommendations from this space today, one for BTST and one for positional. So I think pharma would be the one space where no trader should focus on for the coming week.
All right, Himanshu, what about you?
Well, absolutely. As far as the Nifty is concerned, this week was a sideways consolidation, and broadly, if you see 12,300, 12,400 was the range where we spent most of the time. But having said, the broader markets has actually participated, and the strength and the breadth has seen improving gradually. So as far as the Nifty mid-cap is concerned, I think again there is some more scope for bounce, and 18,200, 18,250 kind of levels are expected in the mid-cap index. Most importantly, I'll be watching out for the Bank Nifty. The strength coming out from the Bank Nifty is very important if this market has to move higher, because as I just mentioned, 31,500, 31,450 is a very, very strong support for me in the Bank Nifty. And if at all there is some participation starts coming in from the Bank Nifty, I think the index, not only Nifty and the Bank Nifty, will again start to move higher, and the participation will start coming again from the frontliners and from the large stocks. So yes, pharma is one sector that has given a strong breakout today. Having said, metals and IT are the two sectors that have shown some kind of consolidation and some retracements in today's session. So having said that, I think markets will be watching out from the results of Reliance after the markets today. And starting the next week also, the expectations as we get closer to the budget, the markets will be getting its expectations from the budget. So all in all, the trend still remains strong for the markets. But I think Bank Nifty is one pocket that I'll be watching out, and I expect some kind of outperformance or some buying coming in from the bank sector going ahead.
All right, we'll watch how that shapes up. Himanshu, Ruchit, thanks very much for joining us this afternoon. All right, and on that note, it's a wrap from here. The entire team of Countdown, thank you so much for watching and have a great weekend.